Oh, who came with a fan club? So I was going to ask who is awake. It seems that you are much more than us, so we need to work a bit. So please sit down. Who came with a fan club? I mean, I didn't recognize the team. I didn't know we could come with a team. So just because it was a 9 a.m. session, we wanted to begin with a game. We are not under our pictures. Try to recognize us, and at the same time, we'll present ourselves. So we have 45 minutes together. They asked me to be sharp. They just forgot I'm French. We're always late, but I try to do my best. So I'm Laurent, the founder of the Paris Fintech Forum, and a big fan of the Singapore Fintech Festival forever. And we are very happy this morning to welcome all these very nice guests that will present themselves in a few minutes. We have one subject for this morning that we'll try not to treat, because it's quite hard for 9 a.m. That's what we said during the green room, which is how do we build a resilient business model in this crisis world? So we can speak for 45 minutes of the bad news world, but we will try to speak positively of how we can find solutions, develop new business model, and adapt to the situation of this so many crises. Because as you all know, in the world of today, we don't even say we have a crisis or we have two crises, but we have so many we can't even count. Could be, of course, a big climate one, but we have also the post-COVID situation. Nobody knows if it's post, ongoing, or whatever. We have inflation, interest rates. We have, of course, energy, kind of a war situation. So we can't even count them. So we dream sometimes we are in a movie of Marvel with some superheroes. So I don't have the superheroes this morning. I have my superheroes. They will try to bring, you can find your personage if you want, which one you want to be. So in a nutshell, we have around the table a digital bank from a big bank targeting the end bank. We have an historical fintech from the RegTech space from UK in a post-Brexit world. And a new GLT player in the ecosystem for securities and payment, led by a financial institution, and a fintech leader in payment operating all across the globe. So you have people having about all the industry which are impacted by those crises. So we begin in a second. Please don't forget, I have a second tip here for your question. So you can go on Slido, ask your question, and at the end of the session, I will try to keep 5 minutes to ask many of them. So please, you can begin right now, because if I see them, I can even take some of them during the conversation. First, I will ask my fellow panelists to each of them present themselves for like 2 minutes for you to understand who they are. Just perhaps ladies first.
All right, thank you. Thank you, everyone, for making such an early session as well, because we really appreciate it. We were wondering how many people would turn up, so we're very happy to see a full room. I'm Diana Paredes. I'm the CEO and co-founder of Suade. We do regulatory software for the financial industry in the form of analytics, calculations, and reporting. And it's been a pleasure, actually, to be coming to the Fintech Festival for a few years. The first one I remember speaking about RegTech on stage as a keynote, and then to see that we're all back together is really an absolute pleasure. So thank you so much for being here with us this morning.
So I'm Robert Clarkson. I have been in the payment space for a very long time, but both building businesses globally and locally. In addition to that, it's nice to be back together with people. At the end of the day, this is a people business, whether you're serving individual consumers, small businesses, enterprise systems, anywhere in the world, it's always a people business. And for the last 2.5 years, it's been very difficult. And I am so thankful to be back in a room full of people. Maybe at 9 o'clock in the morning shows your determination for being here. But at the end of the day, being back in, doing business, and meeting people on a daily basis is what we're all here for.
Arvie?
Morning, everyone. I'm Arvie de Vera from UnionDigital Bank. We are one of 6 digital banks given a license
Arvie has a fan club.
I know.
by the Philippine Central Bank, but the only one parented by a universal bank listed in the Philippine Stock Exchange, and that is Union Bank, which has over 40 years of experience in banking in the Philippines, and grandparented by the Aboitiz Group, which has over 100 years experience in the Philippines. It's a technomerate with interests in financial services, power, food, land, and it's really a 100-year-old startup. And UnionDigital is actually the next evolution as we try to harness a lot of the data and a lot of the ecosystem information that we've been involved in over the past 100 years as a conglomerate. Happy to be here and happy to share our insights. Thank you, everyone.
Thank you. Jason?
Cool. Good morning. I'm Jason Thompson. I'm the CEO of a company called Partior, which was founded just over a year ago by JP Morgan, Temasek, and DBS. And we'll have a few more announcements in the week of what we're doing. But I think, first of all, this morning was a new challenge. I normally get up for a conference. I put on a T-shirt, pair of shorts, and flip-flops. Make sure your hair's okay, put on the filter, and sit down with a coffee. And suddenly it's like, I've got to drive, I've got to get there, I must look decent. So it's great to be back in person, but there was some logistics and getting used to it again. Looking forward to SFF. I want to call out Alandi and Pat and the team walking around this morning. We've all got out of practice, right? We've all done this with travel. You forget how to pack. It doesn't feel like they've forgotten how to put on a great show, and really grateful that you guys got out of bed and got here for 9 a.m. So hopefully we give you some value in this session. Thank you.
And Jason came the farthest, by the way, from Sentosa.
From Sentosa,
I think Laurent came the farthest from France as well.
Yeah. Thank you for the intro. So, as I said, plenty of questions, but we don't care of my question. If you want just to rebound between you, please do. First one, just to begin to show the first question. Facing market volatility, which is one of our crises right now. I mean, the past 2 years, part of it, we were work from home. In front of our computer, we can see in late 20 and the beginning 21, like a rise, like craziness of fintech valuation, like the sky has no limit. And suddenly, it has been another kind of records, like the bottom has no limit. So with this volatility, how does that impact your different businesses and globally speaking, the finance and fintech industry? And how do you manage to build more sustainable, more resilient business model? I think, Jason, you were speaking. I stay with you. I begin with you.
Yeah, so I think, first of all, we're in Asia, and in Asia, we believe in this model of yin and yang, where one is at the highest, the next grows. And I think we've seen that multiple times in industry through revolution, evolution, and devolution. So there's no surprise that businesses that were extraordinary in value are suffering a correction. So I don't think this is any surprise for us. I think there's been concerns over the last X number of years of some of the Web2 business valuation. I think if you step back and look at a macro level on valuation, you take data, for instance, you have two different types of companies. You have companies that use data to serve their customers, and you have companies that acquire data to sell their customers. Very different models. It's the same in investment. Companies that use investment to project valuation, companies that use investment to project strategic value in the company, they're the companies that sustain. So I think what's happening now through COVID and then through a global contraction is businesses that are well run and that have a position in the ecosystem, they're going to continue to be valuable. We've also seen during the COVID era that supply chain has become more efficient. It had to be. So there has been business benefits. It's not all doom and gloom, but I think, this is the Web3 environment. When we look at Web3, we talk about distributed systems, open ecosystem, interoperability. We talk about programmability, composability. These are the things that allow a rich ecosystem to work together and have sustainable economics. So I think what we're going to see now is far more interoperability, whereas in the Web 2 era, we saw far more isolated platforms. So I think maybe the revenue isn't going to be as rich in a percentage, but volumetrically it's going to be more diverse and of higher volume. So I don't want to talk too much about my company, but I feel that we are well positioned in this new interoperable world to make a huge difference.
Just staying 1 minute more with you, I assume when you launched the project, which is in the Web3 and DLT environment, it was at the rising stage of valuation, and now we have this kind of crypto winter. Does that impact you or not at all? This is just buzz outside for you?
We'll talk later in the week about our Series A. We've just closed it, so I've got more grey hair than I had a few months ago, but we just closed Series A. We haven't found it's impacted us in the same way, but I think our valuation, our methodology and theses of valuation is very real. I don't think it's based on a projection of a huge quantum. If we look at the addressable market for wholesale and digital tokenized assets is projected at about 16 trillion in 2030. The wholesale money market movement is colossal, trillions, hundreds of trillions of dollars. but there's an inefficiency in that system of in excess of $100 billion. Now, if we address that $100 billion, that's an impact to GDP. That's sizable. But when you look at the size of those markets, without distributed systems, without interoperability, without an open methodology and principle, you cannot serve markets of that size. That's why they're inefficient today.
Diana, when we met long time ago in different places of the world, the game at the time was to count unicorns.
Yeah.
When we speak of market volatility, it's like also this kind of animals we learn to love. Now we learn how to wait or to say they are not the good one anymore. So what do you think about this unicorn status in this current crisis? Is it still a goal for a company, fintech like you? Or?
I mean, I think obviously we all want to be successful, and unicorns has a very particular definition in the fintech space and entrepreneurial land. But I think that with what's happening now, we all need to take a very closer look at what do we want to be building? Do we want to be building sustainable businesses, or are we after 99% of a portfolio failing for the 1% to succeed? And so that dialogue has always been very driven by investors and VCs and the pressure that they put on companies to grow at a certain pace. But obviously the funding is drying up now. So what I'm almost hoping with this, recession looming, is actually for the conversation to change and to be a lot more focused about sustainability. Bootstrapping a business actually early on, like we did, has been very, was something that was very helpful to us to actually find market fit. And if you find market fit, then you're actually generating revenue that's very real. And then if you fundraise afterwards, then you're actually fundraising on a real basis. So I think that there's been a lot of focus in entrepreneurship over the past few years of, as a CEO, your main job was to be fundraising, but really, we should be seeing more businesses now where as founders and CEOs, your main job is to generate revenue and real sustainable revenue from customers. If you want to fundraise afterwards, or if you want to accelerate the pace to potentially being a unicorn, that's also something that you can do. But you cannot become a unicorn without having market fit. And in many ways, having a sustainable business earlier on allows you to get that almost organic scale that then really allows you to bet on a particular thing to scale in a much accelerated pace. But you want to be very careful around that. I think that like unicorns, it sounds great, but maybe we want a good few horses rather than just one particular one that becomes a unicorn. And that creates a sustainable economy as well. To have more entrepreneurs succeeding, I think is something we should all be looking forward to.
That's interesting to hear, but I also know that, not speaking of Suade, but you are quite very involved in your fintech community in UK, but not only. What do you think, how do you think the fintech team, if we can speak of a team, is prepared to that? I mean, will we see a lot of failure on the way because of that new world order of markets, volatility and impact on what we just said?
Listen, when I speak to some of our friends, and thankfully, as you were mentioning, we're not in that position, but some people are running very low on runway, right? And it is going to be difficult. But at the same time, I also believe that entrepreneurs are incredible people, right? They're the best people in so many ways. They have a vision, they have passion, and they can actually really get a lot of stuff done with very little. And so I'm almost hoping that the fintech community is going to kind of come together, move away from an approach of, overvaluation and spending cash on completely random things, and actually refocus whatever, investment is available in the market to really generate good businesses and sustainable businesses. So, I do think that the fintech community might not look as prepared as we would want it to be, because some people are actually having, difficulty fundraising or maybe have a very small runway. But then maybe that's an opportunity to, thin down and then actually, rethink about what you're actually doing as a product and relook at your product in a way that generates a proper market fit, proper revenue. And then when the market will be, back, you'll be in a very good position to take over the world. So I think that it's, I have a lot of confidence in my community's ability to reinvent itself. And, entrepreneurs in general, our nature is one of hope. So I have to be hopeful.
Robert, your small fintech, it's a bit bigger than what we are just mentioning here. I mean, let's say you are already in the other part of the world, listed and valuation, but does that still impact your kind of business the same way or differently? For example, for when you want to do acquisition and when you want to develop in some geographies, or this new paradigm we are discussing about valuation and volatility market?
Oh, absolutely. You know, the challenges that exist prior to going public only get magnified after you go public. And in fact, you know, for publicly traded companies, every 90 days you have to put out a report card on yourself on how well you did. And so I constantly tell the team, I've brought a few companies public over the years. There are three things that resonate for the investor community before and after going public. It's revenues, it's expenses, and it's expectations. And so think of it as earnings, which is revenue and expenses, and then expectations, which is a multiple. So prior to going public, you spend a lot of your time building those stories. A lot of times it's on the revenue side, you're really growing, it's a hyper-growth organization, you have enormous TAM, you're growing geographically, or maybe you're going from enterprise to mid-market to small business, whatever it might be, or it might be on consumer side, but it's all about the acquisition and consistent growth, accelerating growth of revenues. Then you may start to slide into, okay, now how can I be more efficient and where those productivity gains come in? And that's where you start talking about expenses. And you really can't tell a complete story. And I tell people all the time, and I was thinking about this when you were referencing the unicorns. I think, you know, a lot of people aspire to be unicorns, but what they really want to be is a rhinoceros, right? Because you still have the one horn sticking out, but one of them is going to be able to weather a lot more of incoming threat or potential negative activity. And so I think about that when we build our businesses. At Payoneer, we've now been public for a little over a year, about a year and 5 months or so, and we're being judged on those three criteria, right? So what are your revenues and what's your revenue growth look like? What are your expenses? So that's essentially your earnings and your margin. And then your expectation is your PE. So if your PE is 8 or 6 or 7, that means that you're pretty much, they think you have a predictable path to earnings, but it's not necessarily going to be a bend in the curve. Now, all of a sudden, if you start telling the right stories, you start executing on the plan, you can start to see that PE or the expectations number grow. And that's the difference between a company that makes $1 billion a year in revenue being worth $8 billion and somebody who makes $1 billion a year in revenue and being worth $30 billion. It's all about where they see that business going. And I tell people all the time, you know, on my teams, you have two jobs. One is to execute against the numbers and make sure that we live up to our commitments. And the second is you have to be the architect of the narrative of the business going forward. Where is the business going? Where is it growing? Where is it not growing? And then where are we going to invest to make that growth?
Just one question. I mean, you mentioned it's 1 year or something you are listed. It was at a good time. How do you manage motivation and teams when they look on the smartphone every day on the stock market? I mean, does that have an impact on an everyday basis, or?
The answer is yes, it certainly has an impact. And on days that it goes up, everybody's a little more chipper and their voice is a little bit higher. And when days it goes down, their voice is a little more sullen. I'd like to put like little pieces of tape over the sticker type some days. But, you know, again, the market is reading those signals, right? They're reading your revenues, your expenses, and your expectations, your PE. So again, a narrative isn't born overnight. I tell people it takes at least 4 or 5 quarters of results where you beat and raise, you meet their expectations, you raise their expectations, and then all of a sudden you start to build the brand about the company, right? Payoneer has a great brand, but its brand was private, and now its brand has to be more public. So the first year is more difficult than most because, especially in this environment with rising interest rates, and you have a slowdown in the economy, and you have other issues that are headwinds to the business. It's really how do you keep the team focused on the real story here is predictable earnings growth, an eye on cost or expenses, and then building that narrative of where we want to take the business. And if you do that, the stock price is unavoidably going up. It just may hit bumps along the way.
Arvie, in that turmoil situation, how do you define success, and how do you build a resilient business model in the example of Filipinos and what you explained to us in the green room? I mean,
well, first of all, you have to be very clear about what you're doing. And as a bank, we were very clear that it's not about having a sexy app. It's not about having millions of users that don't add value. It's about a balance sheet. And we're laser focused and clear that's about growing our loans and our deposits. So that as a business model is very clear, number one. Number two, you spoke about expenses. We grabbed and jumped at the digital bank license because we knew that the opportunity of a digital bank is really to be more a technology company and also a bank, and therefore bring the cost to serve down. And Robert talked a lot about the expenses. And in a digital bank, you can bring the cost to income ratio down to 20 to 30% versus a traditional bank that does 50 to 60%. So you can unlock a lot of value there. But to the other side of the equation, where are you going to get the revenue? And this is where you have to understand the context you're working in. We were very clear that we are part of a conglomerate with deep ecosystem roots in different segments of the Philippine economy. It's a very, very geographically challenging economy and country, but we have very deep roots. We have a lot of data, a lot of engagement. So there's a lot of value we can unlock there. And so that for us was the first immediate focus. How do we increase revenues? We unlock the underserved values within our ecosystem, right? And then we control our expenses as well. But working within that ecosystem, right, and having a clear path that you know it's about growing the loan book because that's where the revenues come from. It doesn't come from payments. It doesn't come from sign-ups. Valuation is cute, but it's not profitability. And so with that, we've been able in just 4 months to grow our loan book to now an $80 million loan book. And we do have 1.7 million customers. And we do have a deposit base of $50 million. All because you're harnessing the power of an ecosystem and a platform within that ecosystem that can unlock value. The temptation of a lot of fintechs is to go outside and do the sexy stuff. It is. But a balance sheet, and that's sometimes the loan book, you know, that's sometimes when you look under the hood, that's not too sexy for most people, but that's what drives profitability. And that's what will eventually drive valuation. Many get lost in the sauce. Many fintechs have gotten lost in the sauce. And we've seen that's why 95, 99% of them fail. Because they're after the signups, they're after the volumes, they're after the GTV. Where's the profitability? Where's the revenue? And if you look at digital banks that have been successful in the world, and there are only about 5% that are, you'll see a couple of trends. Number one, they're laser focused on mostly single product. And in our case, we've also focused on loans. Yes, we have a community strategy that executes that, but laser focused on loans because that will bring the revenue. Second, which most have taken for granted, is that a successful digital bank is successful when it has a strong partner or parent. And in our case, we're very clear about unlocking the values and the synergies within the parent Union Bank and within the ecosystem of the Aboitiz group as well. JP Morgan is a great example. They killed their own digital bank, Fin, because they put up a digital bank that was geared towards high net worth individuals and that competed directly. It wasn't even a business model failure. It was a marketing failure. Sorry, JP Morgan. But it was a marketing failure because they decided to go after the same market instead of harnessing and saying, look, you have a lower cost to serve. How do I maximize that? But you know, as a 100-year-old, we like to think of ourselves as a 100-year-old startup and the continuing evolution of that. We're very clear that within our group, there's so much value that we can lock. Even as a bank, we know that. Most banks don't capture the bottom 70% of their market. So with UnionDigital, we're very clear that's the lowest hanging fruit. We can unlock a lot of value there, bring a lot of stakeholder and shareholder value, but also a lot of value to the community because these communities have been with us for the longest time. But now they have the opportunity to take a $50 loan, $20 loan, when previously where they were just doing payments, right? And that really increases our share of wallet within our ecosystem. So we're executing against that strategy. And you think about that, that's actually sustainable against any environment in that sense, because we're very clear about growing the revenue with the highest possible right to win, managing the expenses, and delivering on what a digital bank should do, a 20-30% cost-to-income ratio. But more importantly, because it's an ecosystem, we're able to harness the data that's been within the ecosystem for the past 10, 15 years. And it's not that the bank could not service them, it's just that they could not do it at a profitable unit economic level. But now with the digital bank, you can unleash that value. So to really be sustainable in this kind of environment, a conglomerate has to be very aware of the different dots, different capabilities, and really maximize the synergies. If you work in terms of silos, you'll kill it. But if you work in terms of shareholder value and community value, you can actually milk it and maximize it. And that's the way to really execute, I think.
Thank you. Before going to the next one question, I have just one last on this valuation, but I just wanted to say that I can't see you with the lights. So I don't know if you are used to this kind of stage or not, but I can tell you that between 2016 and now, let's say the way the digital banks are speaking of themselves or their business model have changed a bit. You should take a look at the previous videos. Jason, just one question. You mentioned you closed your Series A. We have a lot of entrepreneurs here, and perhaps they want to raise money currently. I mean, any advice?
I think it comes down to what Arvie's just shared. It comes down to what you shared around not just predictability in revenue, predictability in strategy, expenses. It's running a business well. It's making sure that the fundamentals of the business are there. So a company like ours that is very young, we've already had to develop governance, risk systems, et cetera, of a larger company. So it's just fundamentally going to market with a story that is accurate. The narrative is well drilled, not just from, not to paint a picture, but actually to lead the partner through the process of diligence. The narrative should be consistent through the diligence. So I don't think it's changed. I've been involved in raising money for a long time now. I think the best way to raise money is openly, transparently, and then be very, very clear on the deployment of your capital. Then it's a belief system that you build with your partner on the investment, but also a belief system on the deployment, and those two have to correlate. So yeah, it's been a difficult period, but we've managed to do it.
Because it's quite strange, because when I spoke to a lot of VCs this last few months, they say they have also a very big slowdown in requests for funds. Many people say they don't give funds, but they say we receive much less application, much less demand, which is quite strange because if you remember the 2008 crisis, a lot of big unicorns of later were built in 2007 and 2008. I mean, usually during crisis, you have the future champions.
But you have some critical issues, and I use critical precisely. You have some very large organizations with a very short runway. And I think they are trying to raise money, but the narrative is super tough because if you have a business that's burning $1 billion a quarter and has $5 billion in the bank, even if they raise $5 billion, there's no security, there's no future in that return potentially. It becomes a really tough sell. Then you've got other organizations that believe valuation dilution is too high at this stage. So they're trimming their runway, they're running businesses, they're not getting distracted by the shiny things, they're going back to the core, and they're going to hold out for valuation. So I think there's a balance of the good businesses holding out for valuation return, and there's larger businesses that are really struggling to attract capital. So it's going to, it's going to be a tough 6 to 12 months for some very big businesses.
Thank you. Market volatility is just one part of the equation. I mean, of course, it affects a lot of you, but not everybody. Definitely inflation, economic crisis, interest rates affect all of us and everybody. And some of you here have direct-to-consumer businesses, and so I assume it has a deeper impact in that case. I mean, Robert, you were mentioning interest rate a bit before. Can you tell us how this other kind of crisis we have today with on one side, inflation a bit everywhere in the world, in fact, and interest rates which are rising also a bit everywhere in the world. How does it impact big business of payment cross borders like you are doing?
Absolutely. So even as we serve 5 million customers around the world, but our success is a byproduct of the success of our 5 million customers. So while a bigger organization like Payoneer may have strategies around how it deals with inflation, how it deals with larger interest rates. We can do hedging, we can do other things like that. Certainly many of our 5 million customers can't do that. So in other words, we have to be able to extend that kind of capability to them. So that's one. But I do think, just to kind of go back and set the scene here, I think for the last 10 years, we had very low inflation and very low interest rates. And so, everybody looks like a great swimmer when they swim downstream. It's when you have to turn and swim upstream that you find out who's actually a fast swimmer and who's not. And I think a lot of companies have built models and served customers in a way that the customer always had money to spend, prices were always reasonable or coming down, and there was plenty of TAM or opportunity available. And I think as those things start to tighten up, And you phrased it perfectly. You know, there are hawks and doves, right? Hawks look at interest rates and doves look at employment. And as you start to move through high inflation, both of those things come under pressure, right? So right now you're starting to see the beginnings of hiring slowdowns or some of those where not necessarily layoffs yet, but in some cases there are, but in most cases just hiring slowdowns or hiring freezes. Well, two things drive consumers more than anything else: the cost of things and their ability to pay for it. And so as a business, we have to watch out on behalf of 5 million other small businesses. Can they afford what they want to buy? And will they be in business, or will their customers be, continue to be able to buy from them because they have jobs? So I think that's the biggest headwind facing the business today. I know there's a lot, obviously coming off of a pandemic, there's wars, there's obviously tension geopolitically. But if you were going to look at two things that would really test whether your model is effective or not, it's going to be interest rates and inflation. And the companies coming out of this are going to be set up for years and years and years of success.
Arvie, launching a model based on the balance sheet when you have a raise of interest rate, a raise of inflation, so I assume also a raise in risk default. What are the advice, and how do you see what other people should do when you have to manage a balance sheet today in that world?
Well, I'll go back to the ecosystem strategy which we engaged, no? And that's really also why we did that, because we saw that the lowest risk would be in the ecosystems we're already serving, where we have the more direct path to lending than standing out in the corner and just lending out loans, right? And then you have a collection problem. If you're lending within an ecosystem, you have an anchor community, an anchor steward in the ecosystem, and that's an easier way to penetrate and to obviously provide credit because you have more information, more data, rather than using payment data, which is really not a good proxy for someone's capacity and willingness to pay. But if you have his pension data, if you have his salary, that is a great anchor to start with and obviously limits the risk. And then you can properly price the risk, right? Because he has been your salaried payroll employee for X number of years, you know that you can give him a customized interest rate. Rather than standing out in the middle of the street and you wait for Robert to come in and you just give him the same interest rate you'd give anyone walking off the street. Very inappropriate, very anti-CX as well. So to summarize it, what we're saying is our way of de-risking that approach was really to start with the ecosystems we're embedded in, where we have all this data, we have all these anchor communities, we've been engaged in these communities, we know the value chain, when we know where to unlock the pieces. Because in some cases as well, when you're in an ecosystem and in a conglomerate with such a huge value chain, you can be an enabler in one, and the other part of the conglomerate can make the value, right? It doesn't have to be siloed, because you're thinking in terms of shareholder rather than simply a stakeholder, right? That wider view really allows us a more successful right to win, right? And really de-risks a lot of the execution challenges as well. Many get lost in the sauce about really trying to get the volume. And then the problems of collection, of bad loans happens. In our case, we've been lending to the ecosystem, and it's still what we consider the lowest risk. We haven't even gone downstream to the highest risk. And the performance of our portfolio has shown that. So if you stick to where you're strong at and you focus your business model and sharpen the execution that way, you can really manage a lot of the risk there. And that's how you sustain the growth.
Thank you. As you can see already, many issues, but still others. This week, it's an anniversary for me, a birthday. It's 25 years I landed the first time in Singapore. And I remember when I came, I was just graduate, and it was a world was a village. It was a globalization. Everybody was thinking we can make business everywhere. Europeans were coming a lot in Asia to build plants and build new businesses with the whole Asian economy. The least we can say is that today's world is a bit different. We don't go in details of that, but I'm sure everybody knows what we are speaking about. So my question for you guys is, all fintechs have built business model, not all, but a lot, on internationalization. I mean, Diana, you came, you have a team here, you have business here. Yeah. And Payoneer has business a bit all over the world, and I assume you are also in different parts of the world. With all those crises we have discussed, and geopolitical issues, health issues, the world has changed for that. More difficult to travel, more difficult to recruit sometimes. We have also some benefits. Work from home can help. But how do you cope with that? For example, yourself, Diana, in your strategic plan to develop internationally, do you change? Do you focus more locally, more regionally? Or do you stick with it, but you need more money to make it, more assets? What's the situation?
So, I mean, I think that you have to...
Your mic, same problem as me.
I've lost the pen to keep it up, so I'm going to have to hold it. So I guess what's been interesting with everything that's happening around us geopolitically is that we have to really think about the broader picture for our businesses, but you don't want to lose that ambition, right, of having a global business that can actually really change the world. So for the recession that is looming, I would say that we would recommend people to think very carefully as to where you're investing your resources, in what countries you're actually thinking you'll be able to generate the right kind of revenue. But you should not really lose sight of the opportunities that are out there globally, right? And the world is a tricky place right now, but obviously we're all hoping that things will stabilize. But I think that what's also interesting in this globalization type angle is that at the end of the day, we have technology businesses, right? So we are actually people that are bringing better technology to the world. And, we work in regulatory technology. It's enterprise software innovation 101. And there needs to be a lot of innovation happening in that space. And so I think that the conversation of globalization has to really be tied with transparent technology, with better technology for regulation, with better technology for supervisors, with better technology for governments. And what we should be really pushing for as entrepreneurs in tech is to actually have better governments that use better technology, and that technology fundamentally empowers citizens to be able to help in the decision-making process. So we've been very lucky as a company, because of the work that we do in the financial industry in regulatory software, to work, for example, with the World Economic Forum and with a lot of regulators around the world. And there is a concept there around agile regulation and actually bringing technology into that place of legislation to be more efficient for citizens. And so if you want globalization to continue, and if we want globalization to be a success, and if you want globalization to be something that we can actually really leverage on as entrepreneurs going forward, I think we have to really fight for this tech innovation at the government level, at the legislative level, so that we can actually see, more freedom for citizens rather than technology being used the other way around. So I think there is an opportunity to continue being globalized, but we're going to have to really push as entrepreneurs to bring better technology so that we can have more accountability at the regulatory level, at the legislative level, for a better globalized world rather than the other way around.
Jason, do you want to add something on that?
Yeah, I do. I think, first of all, I think the Chinese symbol for this is two things. One, which is around threat, and the other is around opportunity. And I think within any downturn, there is both a threat and an opportunity. If you look at, and I really like Robert's analogy of swimming downriver when the current's behind you. And we've lived in a highly inefficient world through good times. And so when we look at if we just look at cross-border wholesale payments during this, and that will be impacted by this global this geopolitical change, this looming potential of a new Cold War. However, what is happening is there is a demand for distributed systems, for interoperability, for a way of looking at federated systems and allowing them to interoperate. I think there is opportunity there. There is an opportunity to take out over $100 billion of inefficiency just in wholesale payments without tokenized assets and securities.
Yep.
There is also going to be a more fragmented or proliferated currency spectrum. We're going to see countries demanding going directly with no intermediary of currency. I don't anticipate the US dollar will get smaller. I anticipate that there will be proliferation. So I think, as with any downturn, there's an opportunity in the expense and the cost of an industry. There's an opportunity in the speed and reduction of risk. And there's an opportunity in an evolving landscape. And so I'd come back to your point, which is ensure that your technology is fit for purpose, ensure that your organization is fit for purpose, ensure you're running a lean machine during these times.
Can I jump on that point? So to add to that, Jason, I think, and forgive me, but it requires also a different mindset, a humility right? You talked about interoperability platforms. You know, for banking, we are becoming more and more invisible, right? And more embedded. And that really comes from the thinking that you will need banking but not banks in the future. And that the more invisible we are, but the more we enable in that environment that you guys just painted out, the more you have to be humble and think about, look, I don't have to do everything myself. It's about enabling interoperability. But banks normally think they want to do it all. So I think just to add on that, on top of the technology and the efficiency, you have to have a mindset that, look, I can unlock value in other ways. I don't have to be the forerunner. I don't have to be the person in front. I don't have to be the institution in front. If I'm enabling the pipes behind, similar to how Payoneer is doing it as well in terms of global payments, right? You are adding value to the ecosystems. You are adding interoperability. I mean, Payoneer is not exactly a brand that everyone knows about, but they power so many of the world payments, right? So the more invisible you are, right, the more relevant you can be to your ecosystems if you know exactly how to unlock that value. Because all of the things that Jason just spoke about really requires you to say, yeah, I might be the guy behind the guy, enabling those things, but I am bringing value to this community. So in this new age where you have everything, everything is interconnected, everything is interoperable, you know, maybe it's good to leave, and as a bank, that's very tough because we grew up thinking, oh, we have to be the front, we have to be. But if you're empowered by UnionDigital in the end, and empowered by Union Bank, then you are adding value. So the more invisible you are in a world that's becoming more and more embedded, right, the more relevant you can become.
I mean, there's an element of responsibility that's very real, which I think we're all going to have to play a role in to just help the world to be better, right? So that's what I think that's something we really need to keep in mind. Humbleness, but also responsibility and accountability is something we should push forward with our tech.
We have 3 minutes left, and you should ask questions later. So for the one who didn't wake up still, I have only 3 questions. You need to work a bit, my friends. So I will take the first question. During that time, please, take your smartphone, use your SAMs. This is a morning, but I'm sure you can make it. So first one is for you. You just mentioned, you know, plenty of things you can do as opportunities. We have a question here, which is just right in here. Has blockchain picked up enough in payments industry to replace traditional payment mechanism and instruments? Any opinion on that?
Great question, Sanjay. Thank you. The question is, has blockchain picked up enough in payments industry to replace traditional mechanisms and instruments? I'd stand back from blockchain and I'd talk about DeFi and TradeFi, the requirement for global ledgers that host complex transactions and that allow organizations in multinational, multifaceted ways to transact. So if you take something like a wholesale cross-border, multi-currency transaction with foreign exchange on an asset and a DVP, delivery versus payment today, if you take existing systems that's complex, burdensome, costly, liquidity risk, it's just highly inefficient. I think as we see DeFi and TradeFi evolve, as we see common global ledgers, highly likely to be permissioned and private in the FI sector, I do think now is a time that we will see them grow rapidly and that we become, say, if my company is providing the global ledger, who cares to a degree? The fact is it allows a transaction to happen atomically that is very complex. So I think we have been laggard in adoption, but I am seeing now, certainly with, I think we're talking to over 70 banks now in the first year of our life. There is a real push towards adoption, fast.
I think today on that stage will be a subject many times about that, so stay tuned. Arvie, last question before you. We have 46 seconds now. When do you think the digital banks will overtake the traditional banking model in terms of usability and value, if any time, by the way?
Well, I think adoption is going to take a while. It's not the thinking that digital banks will all of a sudden overtake traditional banks and they'll disappear one day. No, there's a lot of use cases for traditional banking in terms of the branch model, which are still being used today. But the promise of the digital banks is really to bring down the cost to serve. And this allows you to tap the lower mass market, which is really the challenge in the Philippines and many places around the world. You're talking about an underserved community. In the Philippines alone, it's 60% that are underserved, underbanked. And we talk about financial inclusion. We don't talk about payments or access to a bank account. We talk about access to credit. And if I can access credit at a lower amount, lower value, then I can give that farmer that loan that he needs at the appropriate price point, appropriate interest rate, and then he can grow his business. That's sustainable, and that's where the value is. Because it's not about banking the already banked. It's about bringing financial services to those who need it the most at an affordable level. Why shouldn't the farmers and these fishermen have the same access to financial technologies which we all have? It's a democratized financial world now. They should have the same best-in-class technologies available in their mobile phone, which is in everyone's hand.
Thank you. As you can see, time is up. It's red because we need to leave the stage now and let the show continue. Thank you very much. You can applaud all my panelists.
You.
Thanks, guys.
And thank you very much to you. Wake up early for us.
Yeah.
Have a good day. Have a good show.